Hello everyone, pretty sure that everyone can see the screen now. So this one should be pretty good. We're going to be talking about a concept which, as you guys can see, people from 2024, they've never heard of before. Well, from me, I don't know if it's been out there, but all I know that this is how I found this thing, right? It's compressed liquidity, right? So anyways, you guys can see that on the screen right now. We have forexfactory.com, right? That's when we're going to get our scheduled times, to expect liquidity insertion within the marketplace, right? On Monday, you can see we had bank holiday, which meant that we're not going to do anything Tuesday, right? Then on Wednesday, you can see that we have FOMC meeting minutes, and something to understand is within the afternoon session, right? It doesn't necessarily mean that the sequential SMT or the cracking correlation that you're looking for should form within a specific quarter within the afternoon session. Once it's occurring within the afternoon session, which means you could have news coming out at 4 p.m., but that's the afternoon session, right? You can look for a sequential SMT at any time after 12, right? And Thursday, tomorrow, we have unemployment claims. And Friday, we have some other news events that aren't that important to us. So here you guys can see that this is why we have been bullish for so long, right? We've been bullish for a while now, right? And even though we went through a lot of ups and downs and consolidation, you can see that price, almost bend to the will of our concept, right? So here you can see that we have yearly sequential SMT, right? So we have sequential SMT between 2024 and 2025, right? So this is the lowest low of 2024, and this is the current lowest low of the yearly cycle that we're currently within. Here again, you can see that price failed to break below this low, but with the Dow, which is usually when you get, the best, highest probability price action, is whenever you have the S&P 500 and the NASDAQ in sync, and then you have the Dow, breaking correlation. All of this is what made price go higher, right? So now is when it will get a bit, well, not a bit interesting, really interesting, to be honest, right? Right. So here you will learn about compressed liquidity and spotting high probability change in the state of delivery, right? So the first thing to note, right, is that at these lows, it's clear that we have sequential SMT, right? And the reason for this, and you can, use this time to look at your Dow chart, right? Same time frame, 5-minute time frame, but you need to be, on the 90-minute cycles, right? So I could turn off the daily quarters, and all we, should be looking at is the 90-minute cycles quarters, right? So here you can see that between Q3 and Q4, price failed to break below this low right here, right? You can see that. And I could make it a bit clearer for you guys, of course, by introducing the Dow on the slide, right? So I need to use the crosshairs for this. Between this quarter, right here, right, between Q4 of the current of the previous cycle that we're just getting out of the previous 9-minute cycle, you can see that the S&P 500 lowest low is this right here, and for the Dow that is its lowest low. So after all of this occurred, that we had price expand higher, we had another SMT which sent price lower, right? Right here, due to the fact that we had this SMT and this candle right here, right after price breaks above this candle right here, looking at the S&P 500. So yeah, this is the last 5-minute candle, right? This is the 5-minute candle that instigated this move right here. So once you see this candle trade above this one, that is a change in the state of delivery, right? So price dropped, we had sequential SMT, went higher, broke this candle. Once you see this gap form, after the change in the state of delivery, do not expect price to fill that gap again, right? So right here we have a small gap, which you can see that was entirely overshot by price. This was balanced price action right here, and due to the fact that we had sequential SMT, that made it even more high probability that we will see higher prices. So someone could literally, just based off of sequential SMT, just buy while price is below the 50% of this range, from this low to this high. Given that within the other asset, this closely correlated to it, there is a cracking correlation between those two, right? So here, the Dow traded below this low here, and just so we can be more clear, you look at the indicator here too, right? So here you can see blue shaded area. Here again, blue shaded area, this low fails to break below the lowest low in the green shaded area. Whereas here, we had price trade below this low. So there's a lot of sequential SMT that occurred today, which is why you're gonna see that, you know, today was very exciting, full with a lot of opportunities, right? Even the high here, that was SMT. Price, when price dropped below the 50% of this range right here. So from this high, I'm not sure. Okay, this wasn't done correctly, that's fine. So from the range from this high to this low, right, due to the fact that this low was caused by SMT and this high here was caused by SMT as well, we have price pulled within the 50% range. Remember, we do not expect price to break below the breakaway gap, but here you can see that the Dow pulled down and created another sequential SMT, right? And this is primarily why you need to not, you know, try to trade the Dow, right? There are times when it will be high probability. There are times when you will still get a proper trade, but eventually, you know, price will come back down and take everything out, right? So yes, the Dow broke below this low, created sequential SMT. Meanwhile, here we had another failure swing. So now, since we see why we had all of that movement, now I can get rid of the Dow. It just clutters my screen. And here we are again. So we talked about everything here that caused, you know, the main reason of the reversal. But now you need to know why you should expect a reversal in the first place, right? So all of this right here, right, from this, and we'll get in another one of these vertical lines right here. So all of this right here, you see from here, this is a 90-minute cycle, right? And this is why I would have exited all of my trades right here due to the fact that this cycle is over, right? Of course, it went higher, you wouldn't need to do that, but if you're a person that you don't like being around the computer too much, at least you'll take something off right here. So yes, this right here is what you use for day trading, right? This is for day trading. The 5-minute time frame, the 90-minute cycle, that is for day trading, right? That's for, going in for a few minutes and getting out. It's not scalping. Scalping is using the 1-minute time frame, right? Well, anything below the 5-minute time frame is scalping, to be honest. So anyways, how do you know when to use sequential SMT when there is not a higher time frame sequential SMT, when there is not any higher time frame levels to use? So basically, it just seems like price is just out here, in the here. There's nothing for price to react to. Here you can see the first sign is compressed liquidity, right? Compressed liquidity is characterized by using the range of this swing right here. So this is the first swing, right? And the reason why this is important is between this high and this low is where we had the candle which initiated the run up. So this is the candle that you would be focused on and waiting for price to trade above in order for you to be able to establish that price has changed its state of delivery, right? So this high, this low, the 50% of this high and this low, you're going to split it in, you're just going to split from this high and this low in half. You'll take the measurement of that, which is this right here, right? So this right here is half of this range, right? Right there. So that's why you have these lines right here, right, which show you the high of this range and the low. And here you can see the price fell down and dropped within the top half, the premium of this range, and then continued higher. So anyways, this is the measurement, right, of half of this range. Compressed liquidity, right, it must continue for at least 3 consecutive quarters. So when it's 4, it's high probability, right? And this is what we call compressed liquidity, right? So this is the measurement that we took from here, half of that range, and this is the measurement that we took from here, half of this range. Here, right, we're going to take this so everyone sees that it is the truth, and we're not trying to trick anyone, right? Whenever you see a price like this compressed, and this is how you know that price is compressed, and this is it's fractal, right? So it's not just, it just happens on the 5-minute time frame. You can use it for the weekly time frame. You can use it for the monthly time frame, right? And the only time, this becomes our target is when we have the sequential SMT. So while this is occurring, you can anticipate this to happen, right? So this is basically what, Michael would want the, I'd say, the market maker buy model to be, right? Well, you can see that it has very, very, deep levels of understanding that you need to actually know what's going to happen. How do you know that this is where you should aim for? How do you know that this is the buy side liquidity when it's compressed? There is no sequential SMT app happening here. There's nothing happening here that makes sense. It's just consolidation. But how do you know consolidation is consolidation? Because this right here, people say this is consolidation, This is me seeing, price priming itself to reverse. So while this is happening here, right, you see the compressed liquidity, you know that, okay, price usually aims after this type of price action, right, of this specific measurement from this low to this high, half of the range. Make sure that price is just within that, limit. Doesn't go out higher, it just stays within. Then here you can see that we just had price run off, right? So this is the quarter that splits the compression and the actual place that you'll see the move occur. So here is where we have a new cycle, a new 90-minute cycle. So here we had the Asian session. Well, this will be considered the Asian session for the 90-minute cycle. Well, the first quarter. Then here, the true open was established. Right out in time, it'll be right around these levels. Price falls below the true open. What are you waiting for now? You are waiting for sequential SMT. So this happens, you're like, okay, that's not sequential SMT. We see price rally, shift, structure. But this is not confirmed as a shift in market structure unless you see the sequential SMT form. So while price is trading here, failing to break below this low, we're going to have the Dow making a lower low here. Once this candle closes like this and price trades above it, then that's going to be your change in the sale delivery for price. Then that's when you're going to see a breakaway gap form, which price will not, return to unless it's done doing its business, getting the liquidity here or whatever. Then we see price expand. So again, compressed liquidity, we had just a quarter of a break right here, right? As long as before this immediate quarter right here, which comes after here, you can find it, right? And there are times, of course, when you have the compression start right here, but there's only one, quarter that you can use to, initiate a lag in price. So here you'd say, okay, price lags here, then the next quarter starts, right? And of course, here, right, we're taking 4 quarters. It doesn't matter, right, as long as it's immediately before Q1 of the upcoming cycle or immediately before Q4. Another thing that will make this higher probability is when you introduce new weak opening gaps. Oh yes, you didn't see this one coming. So this basically, right, I could have literally just told you, look out for the compressed liquidity and just expect sequential SMT here, and then yes. So here we have the new week opening gaps. Once you see price, and you don't even need sequential SMT to know this, but of course it helps. Once you see price just consolidating around that area, right, below the true open, then you can expect price to take out this, buy side liquidity right here, right? So this is, some of the tools, right, that you now have that you can use for day trading or any type. You can use it to scalp, really. But this specific time frame goes with this specific cycle, just as how the 15-minute time frame goes with the daily cycle. So there are people that would rather trade the daily cycle, and there's nothing wrong with that. But this is my favorite, to be honest. So here again, we'll be looking at the sequential SMT that occurred this afternoon. From this range, you can see that price fell below the 50%. Here, within this range, price fell, but did not fall below the 50%, right? Which is typical to expect whenever you don't have a fair value gap right here, by the way, and that's a gem. Right here, you can see that due to the fact that we had the fair value gap at the 50% of this range, price fell within that fair value gap. Then here, within this range, price completely fell below the range, which is what caused sequential SMT. And also, we have a higher time frame sequential SMT that is also underway again. So I hope that you guys found this useful. This right here is something that you should take your time to study. And of course, if you have any questions, please just shoot them at me or members of the staff. With that being said, good luck and good trading.